Well, happy Mother's Day, everyone, and welcome back to another edition of the Forex Market Preview. If you don't happen to celebrate Mother's Day in your country or in your neck of the woods, then give her a call anyway and tell her that you love her because she does some great stuff for us, and it's always nice for her to know it. Let your wife know, too, if she's handling the little kids all day long. But we just got back from a good dinner out with the family and for Mother's Day, and now I thought I would take a little bit of time and run through the Forex Market Preview for this week, give you an idea. If this is the first time that you're watching the show, what we do here every day, or once a week rather, is I try and give you some insights into what I think is going to happen in the currency market, and I tend to try and pick out a couple of different pairs that I think have both an educational component as well as a trading opportunity component to them, so that hopefully it's something that you can use next week or that you can at least watch and learn from, and also that you're going to get a little bit of educational value out of what we do here every single week. So this week I got a couple of different things for you. The first thing I'm going to show you is a Cypher pattern. The second thing which is a pattern formation. If you are not familiar with it, don't worry, you will be by the end of this video. The second one that I'm going to show you is a 2618 trade, which is something that is extremely easy to learn, and I've actually done a 2-hour training on this that you can get absolutely free. All you got to do is go to YouTube and look for it in the list of my top videos or something on the YouTube page. Or you can go to tradeempowered.com and you can download the training there or stream the training right from there. So there's a lot of different ways you can find that. So we'll talk about the 2618 trade. And then last but not least, I'm going to show you a Fibonacci inversion trade that the syndicate members, that I shared with the syndicate members earlier this week. And I'm going to show you how that is playing itself out as well for those of you who may not be familiar with that. And I don't talk much about that with with Forex Market Preview folks. It's really something that I reserve for a little bit deeper training. If you think of the different levels on kind of the scale to becoming a professional grade trader, the Forex Market Preview is really the very bottom rung, and we get about 1,000 to 1,500 new people who subscribe to this video every single week. Every single month. And so my job is to kind of make sure that I'm staying in my lane with the very, very basics of what we do. And then if people want to progress up, if they want to take the next level, they can join us in the syndicate in the morning or in War Room, and they can start learning and growing a little bit deeper. But I leave that to you. Let's go ahead and let's get started today. And we'll kick this off right with pound swissy. Now, you guys will remember when they stopped the manipulation of their currency. You saw that huge move down in pound swissy, and then we saw almost a total rally back up into structure support. We talked about this. I don't know if we talked about it in the Forex Market Preview or not, but I definitely talked about this in terms of this structure level and that playing an important part or important place to look for a continuation of the trend. Well, now we have seen this market come back down, we rallied, and then we broke structure to the downside. Now, I've got some Fibonacci levels on here. I don't want you to worry too much about those because if you're not trained in pattern recognition, those are not going to make a whole lot of sense to you. But here's what will make sense. If I go ahead and draw this in. So you guys saw where that 786 came in at, and it came in, I want to say it's somewhere like that. Let me grab my Fibonacci retracement tool again and drag it in here. Yeah, I'm a little high, pretty close. So the 786 coming in right here at around 149.01 or the 149 even handle. And what we're watching for here, ladies and gentlemen, is we're looking to see if this market will rally back up into this 149 area. If it does, it's going to present a selling opportunity for us. So this is a bearish, what we would call a bearish Cypher pattern. And what we want to see is we want to see the market continue to rally all the way back up into this 786, and then we're going to look to be a seller to see if the market will come back down in and retest these support levels around here. And we're going to look left. If you want to know where your stops need to go, you just need to look left at this previous swing high. This is what we call the X anchor leg of, this is called the X point or the anchor leg of the initial move. So this X point is going to be where our stops have to be above. So we go 151.91s, probably go 153, get above the even handle at 153, something like this. Probably don't need to go 153.20s, but we can probably go 153, call it 15 or so. and that's going to be a pretty good place to look for your stops. And then looking for a 382 and a 618 retracement for those of you who are more familiar, who've been around for a little while. 382, 618 retracement of the C to D leg of the move. Now, if that doesn't make sense to you, fear not. All you need to do is just continue to watch every week, and it's going to make a ton of sense to you as you continue on down the rabbit hole. And if you go to tradeempowered.com, there's thousands of dollars worth of free training there. And if you watch all that training, you're going to know very, very clearly, have a very clear understanding about what we're talking about here. If you're just coming in totally green, it's not going to make any sense, but that's okay. This is just to wet your whistle and hopefully get you to take a step further and actually spend a little bit of time investing in yourself and investing in your future as a trader by going to Trade Empowered and watching the training videos. Like I said, it doesn't cost you anything to go there and watch those. And we've got, I think it's something like 20 hours of training that you can be part of that's absolutely free. So go there and make sure that you take a part of that or take part in that. Let's see here. Let's go to New Zealand dollar. So New Zealand dollar, I told you I'd show you a Cypher pattern. I told you I'd show you a 2618 trade. Now, again, this is one of the free trainings that we have. You got the resistance level here. The market made a rally into this initial resistance point. We retraced. Market rallied back up again, retested the previous highs. And then we saw a break below, close below. Now, this is a break of structure. If you look at the structure level here, no matter how you look at it, you can look at the lowest point here. The market clearly closed below the previous low of the V top here. So this double top had a violation of structure. This tends to indicate future downward momentum, or that the market is going to move further in the direction of the break of structure. What we want to wait for is the most opportune time to sell. And so what we're going to do is we're going to grab our Fibonacci retracement tool and we're going to go swing high to swing low, just like that. We're going to identify the 618 retracement here. Then we're going to wait and see if the market will rally back up into the 618 retracement. And if it will rally back up into the 618 retracement, then we're going to want to sell. Sell the 618 with an anticipation that the market will press back down into the previous structure level and potentially maybe even go a little bit farther than that. And again, I'm not going to get into the weeds on that with you. If you want to understand really fully and completely how to trade this particular pattern formation, it's real simple. Just go to tradeempowered.com and go to the Learn to Trade section and download the, or it's not a download, I think you just stream it, and stream and watch the 2618 training that we have. And other than that, but keep an eye on New Zealand, because all we're waiting for is a rally here from about 74s back up into 7620s. And at 7620s, it's going to present us a selling opportunity. The last one I'm going to show you guys is Euro USD. We talked about the pattern formation here earlier, but we've seen this big, strong rally up out of this particular pair. And the idea here is we have broken structure. So the market has popped here. Here's the previous structure high. Okay. Market clearly violated that. And I sold right here yesterday at 113.32s. I'm sorry, this was on Thursday. 113.32s on Thursday. Now the question is, why did I sell and why right there? Well, it has to do with a little known strategy that you can go and watch. If you go to the YouTube page, there is a video entitled Craziest Trading I Ever Saw. And I named it that to hopefully get you to click on it and watch it. But all it is it's a very simple trading strategy. We look for a market that is in a bearish trend. And you can do this on daily time frames, 5-minute time frames, tick charts, range charts, whatever you want. We're clearly bearish here. Market overall overwhelmingly bearish. And then right here, boom, we get a bullish move. We get an explosion. We violate structure. And it looks as though we're going back into bullish momentum. If we grab our Fibonacci extension tool and we grab an inversion of that leg of the move, what we're looking for with this trade is an inversion of the most recent leg of the move that leads to a 1618 extension. Now, at that 1618 extension, that's an opportunity to sell. The idea here being that the market has been in a very deep bearish downtrend. Then the market gets a really strong rally, what we would consider a relief rally, before it resumes its trend. And during this process, we look for the market to get overextended. And we feel like once we hit the 1618, that market has really overextended itself. And the goal now is to look for a trading opportunity that will allow us to get short. What I did was, and what I pointed out to the syndicate members and the war room members was, the market violated, boom, we pulled up, we're right at the 618. Market was on the daily chart. We're into an overbought scenario here, bearish divergence up into the 1618 extension. We pulled back down into this level here, and I thought, you know what? I got a pretty decent place here. I'm just going to go ahead and short the market here. I'll put my stops up here at 114.25. We'll give myself a little bit of room if it tries to retest. But I'm going to short right here in expectation that we will see a move back down. And I'm not shooting for the moon here. The theory of this trade is that we could see a press all the way back down into structure down here around 105s. We could even see a press lower as the market completely resumes its trend. Because if you look at what's been happening over the last year or so, it's just been terrible. So we could definitely see a move all the way down, but I'm not shooting for all of that. I'm not going to try and clean up all of that in one fell swoop. What I do want to see, if I can stretch this back out again for you, what I would like to see is a retracement back down into the structure level. So if I go back on the hourly chart here, you can see that structure low comes in at around 110.81. And I'm going to see if I can get the market to come down into 110.81 so that I can take some profits off. Now what you'll notice is that 110.81, if I grab my Fibonacci retracement tool here, I take the last leg of the move, just happens to be right at about the 382 retracement. Is at a previous structure level and is just in front of this previous structure level at around the 50% retracement. And so what I'm trying to, you can look at my risk reward in here. I'm trying to grab this much reward for my trade by taking that much risk. So a very reasonable amount of risk relative to the reward I should receive. And this happens to be a rather effective trade. And right now we're up somewhere in the neighborhood of 130 pips, I think, is what we're up right now. And we're looking for another 100 pips at least to boot before we get down here into structure. Now we will be trailing our stops. As this market continues to press lower, we will be rolling our stops and trailing our stops all the way down just in case it starts to rally back up on us. We don't lose all the profit that I've got into this trade. But the important point to note here is I am clearly identifying good risk reward and an opportunity that gives me a competitive advantage or what I would consider an edge in the market. And ultimately, guys, that's what separates winners from losers. I always tell you guys, you need something that's right more than 50% of the time. And I don't care if it's 51%, 53%, or whether it's 80%. It is irrelevant to me what percentage it is. The better the percentage, naturally, the more effective and the easier the trading strategy will be to trade. But if you have something that is more than 50% accurate, and you always have yourself in a risk-reward ratio that's greater than 1-to-1, which means when I win, I always win more than when I lose. Every single trade I take always has a risk-reward that's in my favor. If you put those two things together and you trade that consistently, it is almost impossible for you to lose money. Nothing is totally impossible. But what I'm telling you is, statistically, the way the numbers work out, mathematically, it's not possible for you to lose money doing that over time. You may lose money in the short run. You may have periods where the market isn't working for you and isn't going your way. But over time, those two components together should produce you a positive outcome. But you have to trade it consistently. That's the difference. That's what separates all the winners. You can boil down all the training, all the technical expertise, all the books that have been written on trading. They can all be summed up in one simple concept. Give yourself an edge And as we define an edge, is a greater than a 1-to-1 risk-reward profile on something that is right more than 50% of the time. That gives us a competitive advantage. That gives us an edge in the market. And the second thing is discipline, trading it every day. And guys, I'm going to tell you right now, if it was just the system, we'd have a lot of really successful traders, because there are plenty of really good systems out there that will generate you a consistent return if you trade it consistently. The reason that traders fail is because they lack the discipline to follow the plan consistently. And so I would leave you with that this week. Go back out. As you move into next week and you start your trading day and you start your trading routine, ask yourself, am I being disciplined? Do I know whether I have a competitive advantage? Do I know that I have an edge? Have I tested my trading system? Am I constantly asking myself and checking on my risk reward on the trades that I'm taking? And if not, then my advice to you is stop trading immediately. Go to tradeempowered.com, start watching the free training. There's more free training there. You will get a better education on that site with the free stuff that we have than the $1,000 courses that other people will charge you to attend. Go there and do it, and do not come back into the market until you have all of that with you. And then every day, you've just got to come in and be consistent with your trading. Now, I mentioned the Syndicate and War Room a couple of times. If you guys would like to join me for that, there is a $1 trial you guys can get in for $1 for an entire month. And you can see how it works. You can see what we do. Every morning, I spend about 15, 20 minutes with you guys, working you through the trades that both Akil and I are watching and what we're working on, talking with you through the trading process, and you get to see every single trade that we place. So I place the trades, then we talk about the trades, and then you get to see how the process works. And you get to see the good and the bad. That's really the incredible thing about it, is that when we're on a losing streak and we're losing money every single day and it's just ugly, you get to see how we deal with that. It is the closest thing to looking over the shoulder of a professional trader that you will get without going to a firm and sitting there with them. And so, and you get to do it in 15, 20 minutes every day. It is, and the people who are part of it are part of it for life. They don't leave. It's pretty incredible how many people, the consistency we see with people who are coming in and seeing what we're doing. And you can come try it out for $1. And if not, then that's cool. I'll be back here next week talking with you more about the markets. And until then, good luck, good trading. I will talk to you soon.